Welcome to episode 2 of the Insurance Industry Insights podcast, where Sandeep Karkhanis of Allianz Personal Lines Insurance discusses artificial intelligence, machine learning and digital innovation. The views and opinions expressed in the podcast are the participants' own and should not be taken to represent those of their employers.
Welcome to the second episode of our podcast. Today we have with us Jeremy Owenson, our regular interviewer, Greg Grimer's hosting, that's myself, and Sandeep Karkhanis, who works for Allianz Personal Lines. Sandeep, you've just spent 2 days at the InsurTech Insights conference in London, which is a very big conference, super relevant to what we're talking today. Be good if you could just start by what you'd seen there, some of your impressions, any high watermarks you felt had been passed, or things that the conference summed up, and also your own observations of where you think things are, just a scene set in terms of AI and digital innovation in the insurance thing. And you can even stick to personal lines and your area of expertise.
I think the InsurTech Insights, I think, is one of the most premier, InsurTech conferences happening in Europe, and I think it's lucky to have that location in London. What I actually really enjoy about that conference is actually what you get, often the access to people. I've seen some of the really prominent insurance voices and thought leaders flying in from the US and from a lot of parts of the world, and I am very selective of the talks that I go to, because that's some of the critical thoughts and lessons that you'll get from them. One of the things, as you will know very well by now, which was the prime focus, I think often of this conference as well, was a lot of talk, I think about 8 or 10 on Gen AI. So again, no surprise. So a lot of crisscross ideas and potentials of it. And then I think you have a mix of InsurTechs who are trying to offer their product, show what they do differently. I think so you get access to seeing what their latest products, a lot of the innovations that are happening within that space, and some really good lightning talks to them and talking with them, and what do they really think behind the scenes of a particular emerging technology, or what their thoughts are, unfiltered often. So that's the bit I enjoy the most. And obviously networking is a key element, but within that. But I think that, and also I was on the panel this year, so being on a great panel with select, counterparts of, other insurers or doing sort of similar roles, that gives you sort of great exposure to sort of seeing, okay, where is it that we are agreeing on, common questions, or what are sort of the diverging thoughts, and maybe you sort of realize what is it that you're missing.
I've been going to conferences, particularly insurance conferences, for a few years, and I used to complain long ago that it was the same old story and the same old innovation, but I get the impression that nowadays technology is really making a step change, and we're seeing that particularly with ChatGPT and iterative AI. So it would be interesting. Are you seeing lots of potential use cases for generative AI in the insurance sector?
Oh, that's a controversial one for me, because I do believe the technology by itself has potential, but insurance has its own unique set of problems. Insurance problem is quite unique. So where does that fit in? My take on this is that Gen AI sort of technology will be more applicable or relevant to certain lines of business than others. So from all of my research, reading, I think, for example, commercial lines potentially could have a very strong impact, or if you are an insurer who owns an asset manager, for example, or asset management companies I know are using that a fair bit. So I think that I see some of the strongest and direct potential use cases. And I think other lines will benefit as well, but I think sometimes it's like, what else can you do first? That's, can you do to get higher value versus, taking an example of a more novel technology with high degree of risk. So just to give you an example of that is, if you remember recently, There was the case with the Canadian Airlines, I think, where their generative AI or chatbot gave wrong information to their customer, and it was fined. The regulator fined them, and the customer had to be reimbursed, I think. So I think that most companies will probably use it internal-facing applications where they have a bit of human in the loop and control around it than external-facing, especially if you look at the financial services domain.
It's interesting because I read in the paper that some newspapers are suing generative AI platforms for copyright and plagiarism, and there's also the challenge around ethics. Can you be certain that not only that the Gen AI takes the right decision, but takes the correct ethical decision? Is the insurance sector waiting for those issues to be resolved, or is it pushing on with experimenting with use cases?
Talking to all of my peers who are within this space, whether that's in banking or mobility or a lot of different industry sectors, and working in the AI machine learning space, there's no doubt there is a lot of experimentation that is going on. I would be really surprised if most of them actually have put those into production, and more importantly, getting value, which is either saving money, making money, saving time, etc., happening at scale, because doing it in a small POC is different than getting benefit of it from scale. So definitely it has. I mean, the top tier strategy houses have done a fantastic job in generating the hype around it, and that has caught the attention of all the C-suite. But reality, as we know, is always a little bit different. Might probably come as a bit of controversial, but I don't think we are at the level of what is by definition AI or AGI, for example, as it's called, as artificial general intelligence. For the most part, it is what I call it as good old machine learning, or used to be data mining, advanced analytics, predictive analytics. It just changed names. So I think it's just the casing is changed, but I think the core fundamentals of it are there, and that's what is leveraged now at scale with a lot of the peripheral technologies that have now evolved to take things at scale, as we've seen the world around data change, etc. So I think that is a bit of the change. So machine learning is what I would call it, or even from a use perspective, if you want to stick to AI, I would redefine it probably as sort of augmented intelligence, where for the most part, as I am seeing it, speaking either generally from an insurance perspective or financial services, is you have still for the most part human in the loop. If you look at the insurance, what differentiates an insurer from any other company or any other sector is, in my opinion, that's four things that separate. So one is claims, your pricing departments, underwriting, and you may call fourth probably as the reserving and plus the legal area, compliance, etc. But claims, pricing, underwriting is what differentiates insurance as a business to most other industries. And within those, you've seen a lot of applications which are there, and actually real tangible problems where you can apply machine learning. Telematics, I've not seen that take off too much at scale. Personally, I would say I think it's often used, from my experience, as a tool to reinforce good behavior amongst drivers, especially in the UK. Insurance costs for young drivers is pretty high. So you want to look at it as a mechanism to enforce good behavior potentially, and then as they mature or get older in life, probably the price around it changes.
Yeah. Luxoft as a business does a lot of work with the automotive industry, and of course the onboard computers are collecting loads of data anyway that's traditionally being held in a black box. One of the challenges is that the sheer volume of data is difficult to transmit and therefore use in real time. So again, from a machine learning perspective, is that a challenge the industry has to address, is potentially too much data?
Yes and no. In the sense that you will get to address it if you get access to it. If you talk about driver telematics data, unless it was insured, that box was added by the insurer. Often a lot of the data is held, I think, by the car manufacturer. So if you could get access to it, but I think it's often a challenge. You need to do partnership like Tesla. Again, there is a great example where I don't think you get a lot of information out of it. What you might know as a back of that, as cars are sorry, not cars, but I mean like audio vehicle technology has improved. You have the front cams, back cams behind, ADAS, and a lot of advanced systems which are there. So which means that I think like cars have become generally more advanced, and people are getting more alerts. But then what that has meant is that anytime there is potentially an accident, the severity of it is quite high, because modern cars require more. The infrastructure is just built in such a way that any damage means the replacement parts are quite expensive to change, and that's also the way how car manufacturers potentially make their money as well. It's not in the backlog of their books of their how many cars they're going to sell. It's off the spare parts potentially. So I watched that clip. So that kind of gave me that insight. So where driver safety is improved, but then and potentially accidents may be reduced, but then your costs have gone high. Then add to it the complex world sort of where we live in, where obviously the situation around currently with the war, COVID, and supply chain aspects have meant that and inflation have meant that repair costs along the value chain have gone high.
Yeah. Well, even on the windscreen on a car now, you've got cameras and things in a windscreen. A windscreen replacement used to be 150 pounds. Now it's closer to 1,000. So it's gone up by a factor of 600% because of the sensors in the windscreen. That's just one part.
Yeah, fair.
Yeah, I mean, it's interesting you mentioned Tesla there, because Tesla is a disruptor in the car industry. When new technology comes along, like electric vehicles or digital transactions, that has a big impact. So the banking sector was seen with lots of new disrupting banks in the past that were assumed to come and take over the world. The reality is, I think in the UK, certainly 80% of people still bank with the top 5 banks. Do you see any sort of similarities to the insurance space? Is there a concern that there may be a disruptor coming in, or are the big companies still able to be agile enough?
No, I think that's a really, really good question. I have reflected upon it. So my observation of it is quite different. So we need to separate in that the context around banking and insurance. And this is purely my observation, is banks or banking transactions for most of us are very transactional. You'd want to log in 10 times into your bank account just to check balances, transactions, anything that happened. That's at least my theory or hypothesis, that often has led for banking sector to be much ahead of insurance sector in terms of their digital transformation journeys. Now, going back to your point, in terms of how insurtechs have come in, I think it's a very interesting play. I believe that's happening. So there's a lot of innovation, obviously, in the innovation space. But if you look at it across the the value chain, you will find that there's very few, I believe, companies that have gone on to in the new age that have gone on to become full stack insurers, which is again, they'll do everything. MGAs or managed general agencies, sort of a new way of insurtech, you could call it, where that's one type of insurtech business, where they are underwriting, they support parts of the value chain, but then the underwriting will happen by the core primary carrier, for example.
Yeah.
So that's one type of disruption which is happening, that gives them access to, as a broker channel, I think, to access new pockets of customers. Then you have insurtech disruptors who are coming in as sort of a wider technology disruptors who will probably help you along something, as you were saying, they transcribe your PDF documents, extract information from it, simplify the value chain in that. Somebody is helping from an underwriting perspective, underwriting workbenches, post claims, so they're helping along the elements of the value chain. What I've observed and read is that most of the insurtechs are focusing in Europe and UK around the distribution element of the value chain. The full stack is very low. Then there's elements of, either in the claims journey, underwriting journey, pricing often tends to be very two major players within the insurance world, which is either, I think it's W2W or Earnings who kind of, help in that focus. And then, the distribution element. So
the comparison sites were obviously a
that's
massive disruption.
Yes, they call it.
And don't have a parallel in banking.
You're absolutely right.
But interestingly, the comparison sites are very big in this country. But if you go to Hong Kong, they don't exist.
Yeah, I think in lots of markets they don't exist.
Yeah, so that's an unusual disruptor. What do you think going forward? I mean, do you think there'll be similar disruptors coming in, and will they be regional? From the conference you just went to, is there a regional element in what you've talked about because of the way people buy consumer insurance, the size of the market, and other things?
Yeah, I think absolutely. So I think if I had to slightly rephrase what you were asking is why, in a way that, why are we, for example, not seeing sort of the, let's call it the Uberization of, sort of P&C insurance? Why has that not happened? So I think the point I mentioned earlier with regards to sort of the, full stack carrier, very few have actually gone on to become that. You have a bit of the lemonades, etc. But then I think they have a great marketing engine that's dry. But if you look at their loss ratios, etc., they are, nowhere as great as or successful, I think, that they claim to be. This is, again, my personal opinion. Then where, to your question, I think what will, obviously the great nature of it will differ from is the regulatory aspect. This side of the continent in the UK, has taken different stance in terms of, how, for example, AI should be, implemented on the other side of the continent. In the US, where machine learning has been used in terms of, decision making to help the insurer, but that has, sometimes not helped the insurer. So then somebody was, I'm guessing, incorrectly treated. So then they could go to the state level, and that impacted the journey. So I think besides this one, as you will know, is like in general, innovation is very, very hard to make happen. There's a number of books around it, but actually doing stuff is hard. And to round off, I would say the third thing why we have often seen two great successes around this sort of, is for great disruption to occur. One great element required is timing. So a lot of convergence happens when, a lot of confluence of factors will come together. So I believe it will happen potentially someday for insurance, but I think that's again one of the challenges.
Yeah, I wondered. I've always wondered why insurance is sold on a 12-month cycle, which basically says, I'll speak to you once a year, whereas banking's being sold on the basis of day-to-day transactions. Are insurers looking at changing their product cycle to generate more customer interaction?
That's an interesting one as well. I think you may find instances of subscription-based insurance in things, but I think by and large, at least the market at this point feels like, or at least customers don't seem to be ready for that sort of thing. That's my sort of take of it. You don't find too many instances of that. Where it might work is sort of the influx of change that is sort of brought about by gig economy. Where you are, let's say, an Uber driver or Uber Eats or whatever. Again, I'm just using company names as example, but that, or you working in sort of there's a couple of apps where you needed to move furniture from point A to point B. Somebody's a freelance driver, so that's, you get cover for that in the period of time. So yes, in that sense, that is for me sort of the subscription. There's a company in the US founded in 2009 that I think had almost 385 billion in terms of direct premiums in 2022. Again, life insurer. So it's not just like sort of the incumbent insurers who have been there for hundreds of years or 50 plus years who know the game. They are that's a bit of the survivor bias. They've been around. They are the ones who survived, etc. But there are definitely, I have 3 or 4 other examples in my mind of companies that were founded, and if you look closely in them, there will be attributes of what makes them successful, despite sort of the cyclic journey that we're seeing in terms of fundings. It's often your value proposition, what real problem is it that you're solving.
And it's interesting, the idea of showing somebody a picture of their older self for the empathy image in a life insurance sale. And that's an interesting play on AI nowadays. Most people's phones have got apps that will take a selfie of themselves and age themselves 20, 30 years so they look like they're an old man or an old woman. Unfortunately, most people use it the other way around and make themselves look younger. This is how I could have looked, or this is what I should look like on a dating app.
Powerful.
But I mean, in terms of AI, I mean, it is presenting itself in some very strange social areas. Where do you think most it's going to impact in insurance?
I think that, as I said, there's three core fundamental aspects of insurance, at least as I understand it from a retail P&C perspective: claims, pricing, underwriting. So claims is, as like insurance is sort of sold, not bought, and some of those other universal sort of truths around insurance, and the aspect around it. So you're selling a product of whose price you don't know until a very long time. So if insurers could gain value from sort of doing machine learning to improve decision making at so classical touch points are at your FNO, which is the first notification of loss, and for any insurer, if you can optimize or augment decision making at that point, there's numerous decisions that you can make that could help the human assessors or claims handlers. What I think is that's again an area I found great understanding and empathy for people who do that bit, because we often say, machine learning, this and that, but I think what I've seen work very successfully is sort of the marriage between the two. So something we've done over the last years, and we often recommend people in our team to is to go and sit next to claim handlers, listen to the calls and see, because somebody's house is flooded, they are going through the stress situation. How is it that they handle that with care and assuring that they're going to get the cover, but then they have to still do the job. The onset of or the stimulus information is so much, and then they're working with legacy systems in there. So that's again an element. So I think any machine learning solution you build to add those touch points will have to begin. One is embedded within those systems. But then it will have to factor in or allow in for the human to override that decision if they, based on their experience of doing that, if they think that I don't need to follow the algorithm's recommendation, they can override it based on the extenuating factors that the machine, the algorithm doesn't know, the voice, the distress, if somebody is in different conditions. So that should be allowed. So I think that sort of symbiosis or confluence between the human versus technology is where you will see, I think, from a claims perspective, you will see great successes. I was surprised, when I'd worked previously in consulting, but in insurance and other industries. But when I joined, and over about 7+8 years ago, is the richness of information that exists in insurance. Richness of data, and that is quite interesting. So where I'm going with that is that you could, for example, use machine learning to, for example, reduce the question set that you ask to people on a very individual and personalized basis in a way that is also obviously fair and following the regulatory practices. But then you simplify the customer journey where you only ask them 2 or 3 relevant or 5 relevant questions as opposed to 20 something. And that is where you've taken away their pain point, because some of the information as in the UK it's quite common that they will use referencing agencies, etc. So I think that combination of information to simplify customers' pain journey and make it as simple as possible. If I only got asked 3 questions and I got the best price there is, then I'll be very happy. For example, you have pets, I imagine, if you needed to make a claim And if the insurer, or let's say even the vet practice where you've gone, you've developed a machine. I consciously not call it AI, I call it machine learning solution. Which, if at that point when you were about to submit those things, you knew what you were covered for, you weren't covered for, or immediately within 5 to 10 seconds or minutes, for example, you got notification like, oh, you made this claim, this is what you're going to get reimbursed for, and this is the money is, for example, there by the end of the day. So that's a great journey to solve.
That's interesting, because I know of an Irish healthcare business that will pay outpatient claims upon receipt through an app, using machine learning to read the receipt and identify the amount claimed and just pay it. And where you're paying for a prescription fee or paying for a medical fee that you've already paid for yourself, it's quite simple to accept that money and get the money straight in your account. But if I'm going to see a specialist, I can understand I probably want to think that the insurance company's investigated it and making sure I've got the right advice or the right service.
Yeah, because what you don't want is that you settle the claim as quickly as possible, and yet people are not quite convinced, and they call you, and then you have a huge queue of calls waiting, which is sort of counter to the perspective of what you try to do.
Nowadays, people employed in insurance companies are much more au fait with technology and understanding how data and analytics work. And I wondered if that led to a coming together between the experts in underwriting and claims and the data scientists in the insurance companies.
From that perspective, I think potentially that is better. That you're seeing, I think the pricing and actuarial professions kind of, incorporating more and more in terms of changing that tech stack, or potentially, for example, using new data, new approaches in terms of modeling. So definitely yes, that has changed, but that's only part of the solution, which is what you need to consider is that if you are building a machine learning model or solution, that's only part of the puzzle. Getting it embedded into the key business systems, getting it used, having it deliver value, and obviously complying with all of the regulation, technical drift, and technical debt that exists. That is again a different journey, and that I think we are still, by and large, a lot of companies that I know, pan sectors, are quite behind. The actual AI adoption across businesses and the actual value delivered for most of them is I would be putting myself out there and say, is probably not that high yet. I think it's a journey. We'll get there. It won't have its cycles, I believe, but I think it will be a process to get to that.
Are there any firms that have got further ahead than others, or is everyone more or less in the same boat?
Obviously, I'm biased, so I think we're quite good in terms of what we've achieved over the last 7 years. And often, how do I measure that? How do I contrast that? Without kind of being too specific, I would say in terms of value add, etc. But I think just it's again the InsurTech conference that I was there last couple of days, or talking to peers and seeing where they are talking to other heads of data science, other in other companies, and what challenges that they're still consistently facing. A lot of them can get to the point of building models, but then taking it to the next stage of getting the business's trust to augment that in their decision-making process is still a major challenge. And then there is the other spectrum, which I find a bit sad, is where a lot of companies are still actually struggling with their data. With large incumbents, as you will see, a challenge is data is in old or classic legacy systems, disparate, no sort of dictionaries around it, and quality again it's varying. So it often always surprises me when we talk about sort of making a quick fix of using Gen AI as if it's going to solve all your data quality problems, because ultimately garbage in, garbage out, sort of the cliched term. But A lot of them are still on their journeys of having only one or two people, data scientists, data engineers in there. And so it's a spectrum that I've seen.
Just from an Allianz perspective, I mean, Allianz is one of the biggest insurance companies in the world globally, and it's been around for years. I think in the UK, it's demonstrated a lot of innovation, particularly through the LV acquisition and the LV mindset that it's acquired. You don't need to talk specifically about Allianz, but do you think there are things that could trip insurance companies up from a data and technology perspective in the future?
I think the way I'm looking at it as I observe through the market is there are few major full stack insurers that have survived and are to some degree profitable. So there's, I think, a bit of survivor bias within that. So full stack insurers are probably far and few, and then there's other sort of innovation which is happening. So large players, and more or less they have different back books, as it's called, risk segments that they have typically insured. So they have a covered base, but how do they then grow into new age segments or whatever other dimensions that are is in a static market or is often through acquisition. So acquisition is again. So I think now it's coming sort of as funding cycles dry. I think M&A is sort of going through cycles and making a comeback.
I'm not expecting Allianz to be tripped up by new technology, but what do you think are the risks for the insurance sector generally?
I think they will have to use all tools that are there in their kit to sustain sort of that competitive edge. What I mean by that, and although I come from sort of this machine learning background, etc., I look at it often just as a tool. It's having worked in it, I think it's just a tool that is available to the business's disposal to leverage it as best as they can, because if you don't, somebody else is already doing that. So you have to use it, but that's not the only tool that is available to you. M&A is again another tool. I think other avenues of growth as they're supporting, like a lot of insurers do, sort of the MGA route, for example. So they have to use all of these kits, all of these tactics to drive growth at an overall level. So technology is definitely great, and if you can assess the risk better than your insurers using the right data, providing fair coverage. Again, the UK we've seen some interesting regulation, I think, with the GIP. I think it's gone in terms of general insurance, I think pricing, I forgot the 1P that came in, the FCA pricing regulations or vulnerable customers, etc. So regulation at the end is also regulators are catching up. I think they do often, I think, a good job with it, or they may not get probably they get a lot of flack for it potentially, but I think regulation at the same time is evolving as well. So how do you compete with an ever-changing world with global risk, climate risk? Data is changing, technology is changing, they are on legacy stacks, and the market is changing. So I think there is a lot of factors here at play which kind of make it very dynamic. But then eventually, if all insurers sort of got almost similar sort of machine learning based pricing, what will be the differentiating factor between them? If everybody is using, let's say, the same set of algorithm, the same tools that allows them to calculate the risk within a certain degree, how will then you differentiate towards your customers? So then again, the service element comes in, a great claims journey. If your car's broken down, you're providing great cover, replacement car, pain-free journey, removing those pain points. Asking fewer questions, as I mentioned, and being there to support somebody in their, time of need, and so your brand will probably matter. I think brand again is a key element within that, amongst other things.
So, final question: what do you think will be your insurance technology insights on, say, 3 and 5 years' time? Then, what's going to be the standout thing?
Coming from an AI perspective or machine learning, I would say a few things would be really great to see. I would love to see, for example, the machine learning teams that every company, every insurer has, seen as sort of a strategic partner within the business. So I think often they are seen as, sort of, you're the tech guys, here's the thing, here's the new technologies, come fix it for us, solve this for us. Whereas I think what is an oversight, I think often is the not going to the business and then kind of sort of coming back and say, okay, this is the new technology. More leadership or teams around the business are aware of what is this technology beyond the hype. Do they understand it and understand its potential, what it can do? One thing I would want is that leadership teams generally become more aware of this, and then they can say, okay, do we need to stop literally everything else and just focus all our time and money on this energy, on this particular technology that has come in? Because if we don't do this, somebody else is going to take all of our business away. I think that is often far and few times that it may happen. Truth is, I think somewhere always in between, because that's, so I think that leadership education is one thing. The other thing I would imagine, I hope happens, is sort of for most machine learning teams or data teams, is sort of the moving away from the legacy tech that exists. And probably one or two things, if I had to add, is sort of more data literacy as well, because what you want is sort of your algorithms, machine learning decisions to be free of bias as much as possible. And then you are making the most, informed, accurate decision as you can. So I think 2 or 3 things, those were there. And I think the innovation within the insurance, the wider insurance sector often, is happening. So how will that be embedded, along the value chain? Is it, it'll be interesting to see within 3 years' time, 5 years' time, how have, for example, the distribution, as where a lot of the insurtechs are focusing on, how is that evolved? Are we seeing an emergence of insurtechs along the different elements of the value chain? There's more emphasis. How has funding changed? I hope that kind of is then gives focus to some of the the right technologies which are often needed to kind of improve that value chain.
Thank you very much for your time today, Jeremy.
Thank you so much.
To hear other insurance companies discuss their own insights and innovations, you can find the full series available at insuranceindustyinsights.com. We're also available on the major social media platforms, with links available for easy free subscription and notifications.